What if you could sell your house and take your mortgage with you? Imagine keeping your 3% mortgage when you buy your next home. That's the idea behind portable mortgages, and the government is actually talking about it. I'm Tane. I break down real estate and money topics the way they should be, simple and honest. Hit that like button if you want to keep seeing more of these videos, and as well consider subscribing if you enjoy this content. Now let's jump into it. What the heck is a portable mortgage? A portable mortgage is exactly as it sounds. You move and your interest rate and your loan move with you to the next house. So if you bought in 2020 and you're sitting on a gold mine with 2 to 4% interest rate, when you go to sell your current home, you don't lose that mortgage. You can take it with you to the next property. So you wouldn't have to start a new financing term and your old mortgage would just get ported to the next property. This exists in other countries like the UK and Canada, but the US hasn't adopted it yet. If portable mortgages have been around for quite some time in other countries, then why is it that now it is becoming such a trending topic? And it's really simple. There's millions of homeowners that are currently locked in on their low interest rate. And believe me, being a real estate agent, just here in Virginia, I've talked to hundreds and hundreds, maybe even thousands of people that wanted to move due to life reasons, but they didn't want to let go of their 2 to 4% interest rate. You know, just imagine you're trying to move to a property where it's smaller than your current home, but the smaller property ends up being a lot more because of their current interest rate, right? Or vice versa, where make an upgrade move where the size isn't just worth the amount that you're going to be really paying for, right? So they don't move at the moment because of their current mortgage. And this has caused such low inventory, high prices, slow housing movement, buyers and sellers both stuck because they can't get into more affordable housing. And believe me, there's a lot of pent-up demand that would get unlocked if portable mortgages became available here in the US. And that's why FHFA, the agency that regulates Fannie Mae and Freddie Mac, they are currently evaluating portable mortgages options. So let's take a look at a couple of scenarios. Let's say you're going to take out a mortgage for a $400,000 loan, and today's interest rate 6%, property tax $5,000, homeowners insurance $2,000, right? You would currently be paying about $3,148.20, right? And that's with today's rates. But let's say if you can port a mortgage and you just go take out another mortgage for $400,000 in this scenario, right? Your payment would be about $2,436.42. That's about a $711 difference, right? But the reality is you're going to come to the table with some equity when you go take out another mortgage, more than likely, right? Let's say if someone was looking to downsize and the property value is less, and so your loan amount would be less. Let's say your loan amount was $250,000 because you're coming to the table with some equity. In this scenario, your monthly payment is at $1,637.34, right? That's almost a $2,000 difference. And that's where the power of the portability mortgage comes in for people that are looking to, they make moves and use the equity and as well keep the same interest rate that they have. Now, do you see why it could potentially free up a ton of assets out there that are not on the market because of their low interest rate? So you must be wondering, but why don't we have portable mortgages here in the US yet? And here's the truth. Portable mortgages sounds amazing, but they're a logistical nightmare under our current systems. And here's why. The first one is mortgage-backed securities. In the US, your mortgages get bundled and sold to investors. Those investors expect your loan to be attached to a specific property. Portability breaks that rule. Investors hate unpredictability. If the loan suddenly moves to a different house, the risk profile changes. New location, new price, new collateral. Investors don't like uncertainty. The third thing is underwriting needs to be redone. If you move from a $300,000 home to a $500,000 home, the risk changes. Lenders would need to re-underwrite every portable mortgages that are transferred. It complicates title, insurance, and securitization. And basically, our systems weren't built for it just yet. Now, the big question is, will portable mortgages actually happen here in the US? Here's my honest opinion. I think it could happen, but this would require some major structural changes in how mortgages are bought, sold, and as well insured in the US. FHFA is currently studying it. Analysts are talking about it. Us YouTubers are hyping it up. But realistically, we're probably years, if not months away from this ever becoming real. It's not something that you can just currently walk into a lender and get next week at this moment. So you might be a first-time home buyer or somebody that currently doesn't have a mortgage, and you're probably wondering, how does this benefit me, right? It sounds like it really just benefits the people with low interest rates. Well, that's not necessarily the case, right? Because if portable mortgages ever become a reality, the biggest winners are going to be homeowners with that are locked into low rates, yes, but the millennials trying to move up homes, investors with low rate properties, people relocating but refusing to give up their 3% interest rate, anybody who wants to upgrade without getting crushed by higher payments. So basically, anyone who feels stuck. And it will open up a ton of more inventory for first-time home buyers, the renters, and people that don't have any existing mortgage at the moment. So what should you do now? Here's what I'd recommend. First, don't assume that portability is coming anytime soon. And second, if you have a low rate, try to protect it as best as you can in the event that it does happen quicker than expected. And if you're thinking about moving, run the numbers on carrying your old loan versus the new mortgage rates and see if it's even worth something. Consider waiting for if you're thinking about purchasing in the next year or so. Fourth, if you're an investor, keep an eye open for the FHFA regulations and announcements because portability could be huge for your portfolio strategy. And fifth, go ahead and hit the subscribe button. This way I could keep you up to date on everything that's going to happen as they drop. And if you're a new viewer, I know you're watching this, hit that subscribe button as well, hit the like, and drop a comment down below. Let me know your thoughts on this. It would be greatly appreciated. It helps a ton with the YouTube algorithm. Thank you.